We know you like hearing from new money managers, and today, for the first time, you're going to hear from Stephen Mathai-Davis, Chief Investment Officer at Quantamize. It is a system that you're going to want to learn a lot about, and that's exactly what you're going to do on the Money Life Market Call. Yes, welcome to the Money Life Market Call, where we talk with money managers about how they do their jobs, what it is that they look for, then what they see happening in the market. We find out some of the things that they like or dislike, and then we put their methods to work on some of your favorite or most interesting stock picks. And today, I'm joined by Stephen Mathai-Davis. He's Chief Investment Officer at Quantamize. Now, this is a very different and very interesting analytical research firm that is, by the way, very new. But if you want to learn more about it, you're going to go to quantamize.com. They're on Twitter at Quantalytics, RES for Quantalytics Research. And I'm very pleased to say, Stephen Mathai-Davis, welcome to Money Life.
Hi, Chuck. Thank you very much for having me on the show today.
We always start with methodology. And like I said, my audience, they love hearing about new methods and things that are different. Well, your methods are very different. They're also very new. So we got to start there. Tell us what it is that you look for and how it is that you analyze things and decide this is what I want to buy. This is what I don't want to buy.
Yeah, Chuck, let me just unpack that statement. Let me just talk about Quantamize and what we're trying to do. The purpose of Quantamize.com is that we're trying to level the playing field for individual investors by democratizing access to advanced multi-factor and AI-powered quantitative models across many asset classes like stocks, options, ETFs, and even cryptos. What do we do at Quantamize? We organize a huge amount of data for equities, ETFs, options, and cryptos into a very user-friendly and easy-to-access format. Right now, we look at 10,000 stocks across 30 countries, both developed and emerging markets. We then apply proprietary AI and machine learning factor algorithms to value these equities, ETFs, options on the equities and ETFs, and cryptocurrencies. Every market's got a unique factor model. We're not using the same factor model for every market. And then finally, we use the proprietary AI machine learning factor algorithms to make recommendations for you. Should you buy a stock? Should you sell a stock? Or maybe you should just continue to hold it. How about options? Do you want to put options on those stocks? And how about the crazy world of cryptos? Do I buy Bitcoin today or do I sell it?
Well, we're going to stay, for the purposes of this interview, we're going to stay away from the cryptos, but we might get into the options because that's a case where I think the average investor doesn't know always a lot about how options work and also doesn't really know the right time to say, here's where I want to buy the stock, here's where I want to buy the option. So does Quantamize help somebody make that decision and kind of point you to this is where it should be a classic stock play, this is where it's an option play, or does that really depend on the investor and their risk tolerance more than it does the system?
I wish I could just answer that one way or the other, Chuck. It's actually a combination of the two. We look at stocks independently of the options. We figure out whether or not we think it's going to go up. We call those conviction buys or A stocks. Are they going to go down? Or F stocks or super shorts, conviction shorts. And then we apply our AI options models on top of that to say, well, we think this is a buy, we think this is a short, we think this is neutral, but is the options market dislocated? Are there ways for the average investor to make money? And the unique thing about options, and I'm an options trader myself, is you don't have to have the stock or ETF go up to make money. Sometimes it doesn't have to do anything and you make money. Those are called yield trades. And what's what we try to put together? On Quantamize, we break down our strategies into bullish, bearish, yield protection, and something really important for your listeners, portfolio protection. I just made a lot of money, and now I want to hedge it. How do I do it, and how do I do it inexpensively? And that's what we're trying to bring with our option strategies platform on Quantamize.
In terms of the way the system works, obviously you're analyzing 10,000 stocks. That's a bottoms-up, intensive AI, artificial intelligence kind of procedure. And it's not necessarily saying, oh, wait, here's what we like or what the system likes about the market. But with most systems, we wind up finding out at any given point in time that while it doesn't say, oh, buy this sector, it does wind up saying, we have more good buys or more top picks, whatever the terminology is going to be, more 5 stars or, however anyone uses their methodology. in certain sectors. So are there parts of the market right now that stand out to you at Quantamize that you're saying, hey, I don't favor it, but our system is telling you, you might want to invest here globally or in these sectors domestically?
Yeah, Chuck, let me answer that in two ways. First off, we're completely systematic. That just means there's no human intervention. This is unvarnished AI quantitative modeling. So I have my own biases as an investor, like a lot of your listeners do and like you do, but that's not going to ever impact what our top picks list are, whether we're talking about China or the U.S. But the three sectors I want to highlight because I think they're interesting and our models continue to emphasize these names, and it's been for several months. U.S. consumer discretionary, Europe energy, and China infotech. And just thinking about U.S. consumer discretionary, if you look at the macro outlook for consumer stocks right now, wages are expected to continue to go higher, improving profitability trends. If you look at ROEs for large cap consumer discretionary, they're already north of 24%. If you see operating margins continue to move up, I'd expect ROEs to continue to expand. Now, that's a fundamental outlook on it. For us, as quants, we break our models down for consumer discretionary into 4 buckets. We call it quality value, low volatility momentum, growth, and technicals. Just touching on quality value and low volatility momentum for a moment. Quality value is not simply quality and value. It's trying to find high quality value. Our models are very different than something you'd see at MSCI Barra or some of the other cookie cutter quant products that you may see on the street at the moment. We create our own bottom-up factors. We consider things completely different. In the case of consumer discretionary, we're not necessarily looking at cheap PEs. We're looking at concepts like EVA, that's the spread between the return on invested capital and cost of capital. We're looking at low volatility. Maybe we're looking at 12-month realized volatility, but we may be looking at other things, especially, for example, the volatility of earnings estimates and how those change.
At this point, I'm sure my audience wants to know just a little bit more about how it works and find out what the system particularly likes right now. So we've talked about some of the sectors that are working well. What are some of the names, a name or two, that the Quantamize system would say, here's what you want to be looking at?
I wanted to highlight 3 names for you. One in U.S. consumer discretionary, one in Europe energy, and one in China infotech. All 3 names that your listeners can buy. Ollie's Bargain in U.S. consumer discretionary, Royal Dutch Shell in European energy, and YY in China infotech. Ollie's Bargain, we put out a quant shot on the stock about early May. Stock is up 18% since we recommended it. And this is over, I guess now about a month and a half. It's a discount store, but it's not competing with Walmart. Think of it more as a bargain deal on consumer goods and apparel. It's rated an A stock or conviction buy in both our U.S. large cap model and our U.S. consumer discretionary model. Royal Dutch Shell is an A stock in our European large cap model, and it's considered attractive, not necessarily a conviction buy in our UK model. The reason we really like it is that it's a great play on energy. It's a downstream name. Our model has liked it now for 2 months. It's up about 3% since we recommended it back in May. This is all in dollars, by the way. And unlike the E&P volatility, this is now downstream. For Royal Dutch Shell, we're talking gas stations. As oil prices go up, the business for downstream starts to improve. And this is very different than, say, the plays in the U.S. The plays in the U.S. are very different. I just want to touch on that for a sec, Chuck. In the U.S., while we have some dynamic energy companies, you have a lot of bottleneck infrastructure issues, which will cap their returns. That's not the case with the international companies.
So now we're going to find out how you feel about some stocks that my audience is particularly interested in.
Awesome.
Hold it.
You got to know when to hold up.
Or fold it.
Know when to fold up.
It's Hold It or Fold It time with Stephen Mathai-Davis. He's Chief Investment Officer at Quantamize. It's Quantamize.com. They're on Twitter at Quantalytics, RES. And check it out if you want to learn more. Now, we're going to try to get into it because Well, Steven's offered to maybe go a little beyond our normal 5 if we have the time for it. But you know how it works, and you know where to reach me if you want to get your picks in. So we will kick things off today with a request we got from John in Seattle and Tony in Henderson, Nevada. They wanted to know about America Mobile, SA to CV. It's ticker symbol AMX.
Chuck, we'd say hold it. It's rated a C in our Mexico all-cap model. Quality value score is a C. Technicals are a C. Growth outlook's an F.
We can sum that up this way.
Oh, it just gets worse and worse.
Yeah, because we moved from C's to F's. That's why AMX, America Mobile, is a sell. Charles in Philadelphia wants to know about CFG, Citizens Financial Group.
We're going to say hold it. Now, this is a C stock in our U.S. large cap model, but if you look at the quality value scores, low volatility momentum, both score attractive.
So it's a pure hold. It's hold it if you've got it, but from that, it doesn't sound like you're buying more. And we started with a C on America Mobile, and it was a fold. We're starting with a C on Citizens, and it's a hold. That's because of the additional things, right? It is a pure hold here, not a you could buy more.
Pure hold.
Hold it if you got it, but you're not buying more on CFG, Citizens Financial Group.
No money changes hands today.
Richard in Chula Vista, California wants to know about Halliburton. That's HAL.
Got another C stock here in our U.S. large cap model. I would have to tell him I'd fold it. D score and quality value. That always scares me.
So, again, what we're seeing here is certain conditions would make it holdable, but this is how we're learning maybe a little bit about the art beyond the science, where the science is putting you in that range where, yeah, if everything else was supporting it, it'd be good. It's not supporting it, thus it's got to go.
Absolutely. Chuck, I would tell your listeners, when you think about Quant, you look at the score, and sometimes you want to look at what's driving it.
That was a fold on Halliburton, ticker symbol HAL.
Sell immediately. Entire portfolio at market regardless of cost.
Our next two requests come from Joe in Colorado Springs, although he shares the second one with a number of people. The first is China Lodging Group. That's HTHT.
Chuck, we're saying hold it, and I'd buy it if you don't own it. This is an A stock, conviction buy, top pick in a China all-cap model. We recently published a Quant shot about this, and this is a name where you may want to think about an options trade. Now, let me just unpack that for what I mean. Right now, when you look at implied volatility for China Lodging, roughly 2 standard deviations below is that 1-year mean. What does that mean? That just means it's cheap to buy. We're recommending investors, if they really believe in it, and we think it's a conviction buy, so this is what we do. We've put together a call spread collar. What does that mean? You buy a call spread. You buy a in the money or slightly out of the money call. You sell a further out of the money call. And to fund that, you sell an out of the money put. That means if the stock trades down and you get executed on the put, you own the stock. But this is a conviction buy for us, and a levered call spread that way, which we call a call spread collar, is the way to play it.
Winner, winner, chicken dinner.
That's a buy with a specific recommendation on how to play it on HTHT, China Lodging Group. Joe in Colorado Springs shared this next request with Brent in Chandler, Arizona, and Tim in East Longmeadow, Massachusetts. They all wanted to know about Momo. That's an ADR that trades under Momo, M-O-M-O.
Folks, if you don't own Momo right now, go buy it as I'm speaking. This is a conviction buy and one of the top names, period, in our China Quant model. It's got an A score across quality value, A for growth, attractive for technicals. This, again, is another one where we'd recommend a call spread collar. Implied volatility right now is, again, 1.5 to 2 standard deviations below the mean. With a call spread collar, you get money back in this trade very specifically, so you'd be a net credit for getting long the stock. Long-term hold, we love it. It's been a top pick for us for the last 3 months.
This stock is blowing up right now.
That's a buy, a strong buy on Momo, M-O-M-O. Let's get into an extra pick or two if we can. Dale in London, Ohio wants to know about PB Bancorp. This will test your microcap knowledge on the system. As you pointed out, 10,000 stocks. It's PBBI, but this is a small one.
Yeah, we're excited about this. We have a U.S. microcap model. This scores as a C for quality value, and A for low volatility momentum. I don't know if I'd buy it, but if I owned it, I'd hold it. Wouldn't sell it, wouldn't fold it. With momentum behind it, this model's been a top-performing model for us. We'd hold it.
Okay, so you aren't necessarily getting a buy. It's a pure hold on PB Bancorp, PBBI.
And look at all the money I'm making.
And last, in the limited time we have left, for Mark in Mitchell, South Dakota, it's Visa, ticker symbol V.
We'd hold it, and we'd buy it if you don't own it. A in our U.S. large cap, which is a conviction buy. It's attractive in our U.S. tech model. It's scoring A's across quality value, low volatility, momentum, and growth. Go buy it.
It's a buy on Visa, ticker symbol V.
Buy, buy, buy. Is that all you can think about?
And yes, good buys are all we can think about because we run out of time and we have to say our goodbyes to Stephen Mathai-Davis. Stephen, this was a great maiden voyage. I look forward to doing this with you again sometime.
Thanks, Chuck. And just want to tell your listeners, go to Quantamize.com. We're giving out free 7-day trials. All models. You can see performance. You can see how we're doing and how we get there. Full transparency.
So, folks, again, free trials available at Quantamize.com. And Stephen Mathai-Davis is the Chief Investment Officer at Quantamize. Again, the website Quantamize.com, on Twitter at QuantalyticsRES. All right, so we are now done, or just about done, with the June 14th show, but we want to give a little postmortem on the Morningstar stuff and everything else, and we'll do just a little bit of that before we send you home right after this message. Stay tuned. We'll wrap up Money Life in just a moment.